Hello everyone, I am Suren Ayrapetyan, an agent with New York Life Insurance Company and a financial services professional with NYLife Securities LLC, member FINRA SIPC, a licensed insurance agency. Thank you for taking the time to watch this video. Today we will be discussing how when it comes to tax-free retirement planning, there are really three product categories to utilize on an individual level. Those three products are Roth IRA, tax-free municipal bonds, and cash value life insurance. I will first explain how these three accounts and product categories are considered tax-free, and then go over how each one works. First, the Roth IRA. Roth was the last name of a senator by the name of William Roth, who passed a bill to Congress called the Taxpayer Relief Act of 1997 to create a tax-advantaged retirement account for U.S. citizens, and the Congress named the product category after him. IRA is abbreviated for Individual Retirement Account. Second is tax-free municipal bonds. Anytime you hear the word bond, it means debt. You are lending money to somebody. Municipalities are states, counties, and cities. The IRS essentially says, because you are willing to lend your money to a municipality so they can use the funds to improve roadways, bridges, schools, etc., and we don't have to put our own money at risk, we will allow you to collect tax-free interest on your money. Municipal bonds are designed to generate current tax-free income. Their yields are lower than other types of bonds because the interest is free from state and federal income taxes. Municipal bonds fluctuate in value with changes in interest rates, but if you hold the bond until maturity, generally you are likely to enjoy a return of principal. Last but not least, the third category is cash value life insurance. The reason this falls under the tax-free category is because the way the IRS views it is that as you are alive and spend or invest your money, you support local businesses and the general economy. If something happens to you and you don't make it home, you won't be able to support those local businesses or economy any longer. With that being said, as long as you have a permanent life insurance policy where you are insured for your entire life, regardless when or how you pass away, you can have a tax-free death benefit. The cash value can be accessed free of federal income taxes, but accessing the cash value will reduce the available cash surrender value and the death benefit. Cash value life insurance offers a number of valuable potential benefits, but many of the benefits of life insurance depend on a policyholder making a long-term commitment to paying premiums and keeping the policy in force. Now let's transition to understanding how each one works. Roth IRAs have annual income limits, meaning if you make over a certain dollar amount, you do not qualify to have it. They have annual contribution limits, which means there is a set dollar amount in which your contribution amount within a given year cannot exceed. Alongside, there is also a 59.5-year-old penalty. The penalty is if you access the money before age 59.5 years old, you will pay a 10% penalty to the IRS and your gains will be taxed. The way your account grows is by being invested in the stock market. If the market does well, there is potential. If the market is down, then there is risk associated with it. Tax-free municipal bonds do not have annual income or contribution limits. They also do not have the 59.5-year-old penalty like a Roth IRA. The way your account value will grow is by the locked-in interest rate depending on your time span and municipality based off today's interest rate environment. Municipal bonds also have what is called default risk. If the municipality you have your money with files for bankruptcy, you will lose your entire investment. It is generally rare for municipalities to default because they have revenue generating capacity to help pay their obligations. Finally, let's explain cash value life insurance, also known as Section 7702 plan. First and foremost, it is very important to know that these product performances are very company specific. Out of the hundreds of life insurance companies in the country, only a handful have them structured the way they were ever intended to work. From that handful, New York Life is the oldest and highest rated. Similarly to tax-free municipal bonds, cash value life insurance does not have an annual income or contribution limit, nor does it have the 59.5-year-old penalty. You can have your money grow in 3 different ways. One is to keep things simple and have it grow with guarantees and eligible company dividends, which are not guaranteed. The second way is having your money grow with the changing interest rate environment. It's possible for your non-guaranteed cash value to grow in different interest rate environments. The third way is with variable universal life, which offers long-term insurance protection for your loved ones and the opportunity to grow your wealth by investing in the markets. It's for those who want tax-advantaged asset growth in their policy's cash value and are willing to assume the risk that goes along with investing. You can choose from a wide variety of investment options to get the right mix of investments within your policy. Some clients like being able to pick their investment options themselves from a range of well-known investment managers. Others prefer using a model portfolio approach with investment combinations that have been built by experts. You can match your goals, risk tolerance, and time horizon however you decide to invest. It is important for your agent to structure your policy to avoid overfunding it. Otherwise, you could lose tax benefits when you try to make withdrawals or partial surrenders from an overfunded policy. With any life insurance policy, you will also have a death benefit attached, which will allow you to leave a financial legacy behind to your loved ones whenever you pass away. It is important to note that in order to qualify, we need to make sure you are healthy enough and that you have enough time on your side to let the account grow. At New York Life, we can help you fund a Roth IRA account and set up tax-free municipal bonds or cash value life insurance policies. My goal is to make sure I work with all my clients to determine the best fit for their needs. It may be one or the other, or we may decide on a combination of products. If you have any additional questions, don't hesitate to reach out to me, and we can schedule a day and time to speak. Thank you.